This is Justin Amazon on Friday, January 29th, 2021. Taking a look at the 5 minute on Amazon, the 32.25 call and the 32.25 put. And I'm going to start on this chart because something really cool happened today. So I had this downtrending line, some confluence here with the 5 minute, hitting some resistances. It was running into the 21 here. Um, had a near touch here on the stock, really a nice touch here on the call. And I saw this breaking out here, which is a really nice breakout candle. I was not in before that, which that would have been the place to be buying. Looking bullish, looking for this to continue with some higher highs. It was just a really nice triangle here. And for it to just retest one more time, come back up here. So I was watching for it to pull back, but I was also sharing my chart with some friends, and we were talking, and I got distracted from what I was talking about, and I didn't see this come down here to $3. I was looking to buy 3x2, so I missed the trade. I said, "Oh, I missed the trade. This is what I was going to do," and I was talking about my strategy here, and I would have had a trade set up to go to get in at 3 and a stop at 2 and a target up at 11, which it didn't reach, obviously. And so I said a few minutes later, it's like, oh, look, I would have been stopped out of this trade. I probably would have lost an R or more than that because it came all the way down to 112 on this same candle. I think it paused at like 180 or something on its way down. So I think I would have lost more than an R. So big shout out to my friends from Real Life Trading, who I was chatting with on just a hangout session. We were just having a time to hang out on a Friday, and I was still keeping an eye on Amazon, how it was moving. But there's a link in my description of this video, and I've been having that in there all week lately. So if you haven't found out any more about real life trading, go click that link and sign up for a free account. You can do lots of education, lots of learning. There's all kinds of stuff to learn for free, and just find out more about what it is and how to trade and trade for yourself. And so I just want to say thank you to those people who I was sharing this chart with and just talking through some things. And because they saved an R, they saved me an R today because I definitely would have lost on this trade. And so looking back at the day, there are some other things that really set up well. You had a really nice shaved top open, and it retested once and again twice here. Now, early in the day, probably would have been looking at different options. This would have been really expensive on the call, but you still had some confluence here with that open price and the highs. And then this would not be the put I've been buying because this would have been much more expensive and harder to get $100 risk on that. So if we go out a little bit, we've done a lot with the 3200 today. Or I'm sorry, we've done a lot with the 3200 put this week. The open would have been here, but it came down to a really nice level right here. Came down a little bit further. It's possible that if you were buying this low, or maybe just buying a round number at 5, that you got into this over here, 5x4, but it easily could have gotten stopped out at 4. If you had a stop there, I don't know if it would have touched it, but that's, at one point this looked like a really nice bullish candle for maybe 30 seconds, and then it completely dropped. And then had a really nice inside candle, and the range on this one was still $1.50, but this still had a really nice move. So if somehow you got into this at 5 or even at 6, it ran up, well, from 5 went up, let's see, from 6 plus 8 is 14. So yeah, you could have gotten out for 8R here. And then it did it again. It came down and touched this, almost touched this line. So this is drawn in at 518, and the low here was 540. So it didn't quite come down that far, but really had a nice bounce from there. And that was just, retesting this, and then retesting here right into the 21 on this one, and rolled over again, put a new low on the day. And this was probably a trapping candle. Had, a nice bearish candle. Let's see, is that a shaved bottom? The low and the close are 26 cents apart. So really close to a shaved bottom, and then just went sideways or up from there. So this was trapping bears today. And then from there, it was recovering at least back up to, near the open price. But all the while, the call was just going sideways, putting a really nice base here. That's why I was looking at that $3 level. And then the put had held this this low every time it just ran into any sort of resistance until this breakout candle, and that's where this dropped here. I didn't expect it to recover here to retest back up to 5. That's why I switched over to the 32.25 put just to see what that would do. I had drawn in the low from yesterday to see, okay, maybe it'll come down that far, and then that would be up here. And if it did that, I thought this would have been a little bit higher, and I um, could have been exiting at, even if it didn't get to 11, I could have still exited at like 9, back up to this level, or even 8, somewhere up in here where it was near these lows. I thought maybe that could have happened. It made it to a high of 8. So if I had been in here at 3, I probably would have exited around 8, but it also probably would have missed that and still stopped me out over here, or maybe just trailed out for a small gain, an R or two, something like that. That would have been nice. But like I said, I was looking for the bounce here, didn't get it. And it didn't come all the way down to that same low. Put a really nice double bottom here. And even the last 5-minute candle, which once I missed this trade, and my internet actually went down right in the last like 8-10 minutes of the day. It's like, I'm actually really glad I was not in a trade today. That's always the risk of trading right up to the expiration. And so I didn't have to worry about that today. But anyway, yeah, it's just something you want to have another option available, which I had my phone. I could have logged in and gotten out of something if I was in it. So I do have that as an option to just turn off the Wi-Fi, or the Wi-Fi's out, but turn on the signal, or I'm sorry, turn off the Wi-Fi signal for my phone, trying to reconnect to Wi-Fi that's not working, and just let it connect through the wireless network. And that would have worked. It probably would have taken me a minute or two to get oriented and get logged in and get to the right screen and everything. So that's always risky to have that happen right near the end of the day, right near the end of the month too. That would have been trouble. But anyway, today we had a really, really nice bearish gap and go. So that's why it was so clean. It gapped and it went. Put a nice hammer down here and a nice retest. So all that was really great moves. I was looking at this to see, could you have bought this? And the range was just too large. So again, we got to step away a little bit. If we go look at the 32.50, what kind of move that would have had? So even the range on these candles, 155, 90, 147. Let's see, did it have a decent move? It went up to 11. Yeah, again, you would have had to been buying a little bit lower to get that 8-hour trade. So yeah, it doesn't look like 8 hours would have worked on this strike. Yeah, so it just makes it tough to try and get an 8-hour trade or an 8-hour setup. Even retesting over here, it came back down to like $4. So if you had been looking at that price or seeing, okay, it's got a low here of 393, I'll try and buy at 393, would have missed it. And then it would have bounced and still not made it up to the 8R. So the bullish moves were just not as strong. I guess this is still a great candle and that really nice hammer candle. It's just, you would have had to settle for less than 8R, which, I mean, 8R is still great. So let's not criticize that, but we would have had to look at something else to get 8R. Something that has a little lighter volume maybe would have worked. This would have had a nice move, but I don't know that I would have been looking at the 32.40. I don't think I even looked at it all today. 32.30. I mean, the volume came in, on expiration. The volume's usually coming in pretty nicely. This has a $2 range for a really nice hammer, $2 range. I like these candles too. And then a nice huge move on the call, 269 contracts. That would have been a great setup here, buying these candles, but still it's hard to get $100 risk there. So, and then we're almost back to the 32.25. So anyway, that's what I'm seeing. Looking at some of the calls and the moves they could have had, I think you would have had to settle for something smaller than 8R, or had a larger risk. And then if you have a larger risk, obviously you're settling for less than an $8 move on a larger risk. Let's say a $2 risk, that would have been 4R. So still, you're settling for less R's. So anyway, we've got some bearishness coming in. There's a little bit of selling, bearish gap and go. The big candle we had 2 days ago on Wednesday, inside day, it's breaking down bearish. And so if I switch back to this chart, give me a second here as I switch this because it's going to jump all around. Hourly, there we go. So, we really did have a pretty nice double top here. It's not super clean, but you can see it. We ran up, we came down, we did, wick down a little bit more, dropped, came back up, retested that. I thought if we held that level, we were just going to sink and, come down to here easily. And we didn't. We pushed back up somehow right into this level, and we're rolling over slower. And right now we've got a bit of a consolidation here. It's just going sideways most of the day. Obviously it dipped down. There's another nice little hammer right here. It's retested right back into that level. If we bounce from here, that's a great hammer that we can say, oh, we bounced off that hourly hammer. Right now, this looks more likely to continue back down here. It's going to be harder to take some trades next week just because the options are not going to move as much with earnings coming up on Thursday after the close. And so Friday, we'll see if we can get some moves, but all the premium is going to get sucked out of every out of the money option, very quickly, first thing Friday morning. We'll see if we get any sort of gap up for earnings. We'll talk more about that as that gets closer. Maybe speculate a little bit more about what I'm seeing Wednesday's video, and then Thursday's video, we should see the options or should see the earnings move. If we get above this range, if we get above 3,400, I think this is gone. If it does something like that, or even if this starts to bounce a little more, I don't really have this drawn in, but kind of what I'm seeing now, if I get my tool back out, is just these kind of lower highs through or lower lows through here. And then you can kind of draw this as a bit of a channel like that as well. I mean, I'm cutting through this, but you hit some highs here, didn't quite get there on this one. If we do something, and keep coming back down a little bit more, it could be doing something like that. So I may spend a little bit of time this weekend just drawing in a little bit more, see if something could happen in here this week. But really a lot of it's going to come down to Friday. So be really careful trading the early part of the week. Like I said, the options are much more expensive, so it's harder for us to see a nice move. Some of the rules I've got for how far away I look at strikes, we're going to be a few times that out. Like I was looking at the options chain, and I think even being further out, let's see, yeah, you got to be a few hundred points further away for some decent prices. So looking at or decent prices, I mean $100 risk prices. So being way up at like 4,000, that's still over $4 here. So that's the kind of thing that's like, I'm looking for something that's usually between like $3 and $7, getting a nice base and, being able to put in $100 risk on that and see a really nice move. But it's just much more expensive. So like earlier this week, we were looking at, I think 3,400 when we were around 3,200 or 3,300, no, 3,250. I don't remember what price it opened, but I can't get $100 risk on the 3,400 call or even the 3,500 call. So that's what I mean. Just be really careful with what your risk level is. Wait, trade something else, whatever you need to do to or go trade paper money and pick a bigger R. But I'm always looking for $100 risk setups. And I just know for next week, it's a harder thing to do. Not impossible, just a harder thing to do. Look for something where you've got an R or two gain that you can get, but also be ready to exit for less, just because the option moves a lot different during earnings week. So that's that's my message for today ahead of earnings week next week. And I hope you enjoyed this video. This is Just AMZN. Thanks.